General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Yeah, I gotta knock out those power of 3 charts. Framework precision, which models hit. Okay, so this was Friday's delivery. This is Thursday. This Thursday, 2 a.m. low. So this was the actual trade I took. We flip. Market structure shift here. I did not see this precision entry here, but there it is. This lines up to something. Hold up. All right, let's get this. All right. Monday, small range day. Or Monday pushed up Tuesday. Small range. Reaccumulated under lows here. This is a daily fair value gap. Any precision here? No. Still untapped liquidity. Came in here. Trying to scoop this over. It's like a breaker. Hold on, wait. I don't even need that. That's too far. This is the daily fair value gap here. And this is a wick zone. Daily wick zone. here, which is basically just like a mitigation block because we pushed up, went all the way up, came back down. Well, not even really a mitigation because it would need to get flipped. It's just an order block that didn't get tapped, a old zone. Where is this? This line for this. Okay, it's right here. Large range Monday. This is what actually created that gap. Left that here. Came back, rebalanced that. Market structure shift here. Closed above the breaker here. Expanded above the daily high. This was a good buy. So really, the best trade for the week would have been Wednesday midweek reversal. High impact news. Kind of kept everything messed up. High impact news. The FOMC, Fed fund rate, week delivery. Gotta keep that in mind too. Hold on, wait. I'm trying to get this right. Keep in mind, this week was special due to Fed fund rate, high impact news. Patience, discipline. I did good. I did good as far as waiting for news to develop. And waiting for price to be clear. Waiting for price to be clear. I did a good job waiting for the setup to come to me. Two wins. Skill sharpened. I think this week is more about being okay with not engaging, I guess, with like social media or like the influences that make you want to just trade all the time, being okay with not engaging with price just because somebody else found a trade. trade. I stayed in my position and I did not chase. And my trade came to me. Next week, improvement focused. Next week, improvement focused on. Let's collect more. Examples for daily profile, intraday profile, standard operating procedure. To I basically want to have it set with if this and that with a hot streak cards. So say I'm reading price well and I don't want to stop while I'm ahead. Then I give myself 2 more trades. Whether they're, no matter if they are wins or losses. And journal the trades in between trades. You can get caught up on those days where you're just rolling. Charts. This is just going to be PO3 charts. Bam, that was fast. Chart 1, NASDAQ. It's going to be H1. Then it's going to be X silver. H1. Then it's going to be UR. SD. H1. Yeah, that's the trade for the week right here. Wednesday midweek reversal profile. Keep in mind, it's FOMC. We can't be like, oh, I should have did this or I should have did that when it was super high impact news. This is the start of this delivery here. So Monday, Tuesday created the range. This is Wednesday midweek reversal. And I think the key thing about this delivery is that news candle. Where's my box? Here it is. Just this expansion down. And we pretty much almost stayed here for so long. This is just FOMC. accumulation. Here, then we broke out here. This open price held, we reaccumulated, and we delivered all the way here, which is probably the best delivery. This down candle low stayed. I would have wanted another low here. I would have. Let's look at this gap too. See that? Break. Retest. Lower low. Easy delivery. Long somewhere is here. Here we go. That would have been the trade right there. Even if it was, these are big trades. No, after FMC accumulation, price expanded, respected the bullish or the plus, the bullish fair value gap, and delivered to buy side liquidity. Let's go over here. So Monday, this is the start of this delivery. This wick was dangerous. And it never got retested. After this, let's just say we disregard this. You can see wick start to hold price. What time is this? This is 5. Weird time. Not usually a high time frame, nor a high probability time. What time is this? 3. This is us delivering here. I don't like this delivery to even force trades unless you took this. Or maybe this. That's the only thing. That's the only thing I can respect. Just using this as an inversion level. Like this candle swept both sides of it here and start selling here. Even for like retracement purposes, it didn't come back here. I was looking at expand, retrace, expand. It came all the way to the breaker block and came all the way back down. This was odd delivery. Also note the stop hunt wick. 60 pips. Not ideal. But after the delivery, I did see Thursday as a good trading day. But other charts were more favorable. Hold on. Favorable. Palantir, PLTR, did a deal with the UK, and NVIDIA did a deal with Intel. So NASDAQ has been on fire. Okay, notes and thoughts. Notes and thoughts. Picking the best times of the week to trade is saving a ton of mental capital. For real. All right, that's that on that. Y'all have a good day. Peace.